In today's video, you are going to learn about power of three, how we're going to use accumulation, manipulation, and distribution. Let's get straight to the video. Alright, so in today's video, we are going to discuss what is the power of three. This is an ICT concept and it consists out of accumulation, manipulation, and distribution. Now, what is accumulation? It's a phase where big players quietly board their positions while price moves sideways. Manipulation, a phase where the market creates false breakouts to trap traders and grab liquidity. Distribution, a phase where big players offload their positions during a sideways market. Now, to keep this simple, let's go through it. So, we have accumulation. So, basically, accumulation is if market does something like this. So, here you have a range. So, price is accumulating. Then we're waiting for a manipulation phase to take out the traders. And then we have a distribution phase where price continue to the opposite direction. If we have manipulation this side, we are going to wait for price. Then we have accumulation, manipulation to the upside, and distribution to the downside. Now there's a bunch of way we're actually going to trade this, so I will get into that later in the video. I'm just going to show you a little bit and talk a little bit about what all of these is and how to identify it. So make sure you stay tuned for the video because I am going to show you later on how we are going to trade this phases. Alright, so let's get straight to it. Alright, so when we look at this price here, you can see market moved sideways right over here. There wasn't any big movements. So this is going to be your accumulation phase. The next one we're waiting for is the manipulation. And you can see this is where price moves, in this case, to the upside. Here you can see, here is that level accumulation. We had manipulation into this area, into this block right over here. And then we had distribution right over here. So accumulation, market moved up, manipulation, and then distribution right over here, just to make it nice and simple for you. So I'm going to show you actually a free indicator you can add to your chart that's going to make all of this easier for you. So that's going to show you exactly, do you need to buy, do you need to sell, and also I'm going to show you an entry model you can use to enter these trades. So make sure you stay till the end of the video. So what is the indicator that's going to do this for us? So first of all, it's going to be an indicator that's created by Flux Charts. The indicator's name is Power of 3 by Flux Charts. And this is the settings that I have right over here. You're going to choose small manipulation at the algorithm mode. You're going to, the breakout method, you're going to put on weak. You're going to enable your TPSLs. Here you can leave everything as normal. I didn't change anything here. Power of 3 Flux Charts, free indicator. You can add it to TradingView. Also go have a look at Flux Charts. Link is in the description. They have a bunch to offer you that will make your trading life so much easier. Link is in the description. Go check them out. So how does this indicator look? Now, all of this I didn't draw out. The indicator did everything for me. So here you can see we had our accumulation. So the indicator actually draws out the accumulation for you. Then as soon as the manipulation happens, the indicator will show you, do you need to buy or sell? And then you have your distribution to the downside. So this indicator is literally going to show you everything on how to do this, when we look at another example, the indicator plotted out your accumulation phase. As you can see here, price moved sideways. It had our manipulation phase right over here, and the indicator told us to buy. And then we had our distribution phase right over here. And what's nice, this indicator actually gives you your TP and it gives you your stop loss as well. So how are we going to trade this with combination with the indicator? Before we jump onto a few chart examples, let me show you. So basically, when we have our accumulation phase right over here, and we are going to wait for price to create a manipulation, as soon as this manipulation happens, the indicator is going to either give you a sell or a buy. So let's say the indicator gave us a sell right over here. What we want to look for, we want to look for some sort of inverse fair value gap that's being created in this manipulation phase. And when price comes through this fair value gap and turn it into an inverse fair value gap, we are going to enter our trade straight away. We're not going to wait for a retest. We're going to go over our stop losses and our TPs. I'm going to show you exactly when we go through a few chart examples, a stop loss, and then we're going to target the TP that the indicator gives us right over here. So you're going to eliminate a lot of noise and you're going to follow what the indicator gives you, and then you're going to apply your inverse fair value gap for this entry. All right, so let's go to the charts and let's look at a few examples. All right, so let's look at our first example. So the indicator plotted our accumulation phase. So we are going to wait for price to either break to the upside of the accumulation phase for a manipulation to the downside, or we are going to wait for price to break to the downside for a manipulation and wait for the distribution to the upside. So let's first see what price does. There we go. So you can see here the indicator automatically plotted out your TP and your stop loss for you. And remember, now we're going to wait for a fair value gap that has been formed right over here. And we want this one to become an inverse fair value gap for us to continue our move to the given TP. So let's see what happens right over here. If we get a close above this fair value gap and turn it into an inverse fair value gap. So that was not a close, it just wicked. So we're not entering our trade yet. We're still waiting for this to close above this fair value gap. There we go. So we closed above our fair value gap. So you can enter right on the close and you can put a 500 pip stop TP right over here. Or you could just put it below this one right over here. The reason why I like a 500 pip stop, because you'll see sometimes the low is a little bit too far, and that's 1,100 pip stop loss on NAS. That's pretty big. So let's go safe, and you can put a 500 pip stop, and you can target the given TP that the indicator is giving you, and your risk to reward is 2.87 risk to reward. So it's 1,400 pips that you can gain against a 495 pip stop loss. So let's see if this trade plays out. And there you can see we got our TP after a while of trading. Price went up, retested the zone again, and we got our TP right over there. All right, so let's look at this example. So again, we have our accumulation. We're going to wait for price to either break to the upside for a manipulation or to the downside for a manipulation, and we're going to continue the opposite direction. So we have accumulation. Now we're waiting for the manipulation. There we go. So the indicator is telling us to sell. There we have our stop loss and our TP. And now we wait for a fair value gap to be created to enter our trade from. So as you can see with this sell, there was a fair value gap right here and there. So now we're just going to wait for price to close below this fair value gap, and we turn it into an inverse fair value gap. Again there, price created a fair value gap, and we can wait for this one as well because we are in the manipulation phase for price to close below this fair value gap to enter. There we go. So we had our closure. We can put our stops on the 500 pip stop loss. As you can see, it's clearing this high as well. And then we can target our given TP that the indicator is giving us. And then that's a 2.43 risk to reward trade. 500 pip stops to gain 1,215 pips TP. So let's play price out and see what happens. There you go. So as you can see, we got our entry signal right over there. We waited for the fair value gap. This one was created after this one. Even if you entered right on this one here, you will still had a beautiful entry to the given TP. All right, so let's look at one more example. All right, so let's look at this last example. Indicator draw out our accumulation phase. So we're waiting for the highs or the lows to be manipulated. So let's see what happens, which way price is going. So we have a sell signal. Let's quickly zoom in. We had a fair value gap that's being created right over here. If we get a closure, we can enter our trade. Hasn't closed yet, body is still inside. Still inside. There we had a closure right over there, a really small closure as you can see. So we can enter right over there. Stops at 500 pips. And we can target our given TP. Is it worth taking this trade? 1.46 risk to reward. Yes, it is. So let's see what happens. There we created another fair value gap. As you can see here, you will probably get stopped out, 500 pips. There we go. So it's one losing trade. That's a losing trade. So now we can wait for price to close below this fair value gap right over here to make it an inverse fair value gap. We created another fair value gap in our manipulation phase. So now we move to this one. There we go. We had our closure right over here from this fair value gap that has been formed, and we can put our stops on a 500 pip stop. It's quite safe because why? It's also covering this last fractal low right over here, and then we can target our given TP, and that will give us a 2-to-1 risk to reward trade. So we lost 500. So now if we have this one as a winning trade, we gained 500 pips. One losing, and then let's see if this one is a loser or a winner. There we go. Let's see if we got stopped out. No, we have not. So we have one losing trade, one winning trade. All right, everyone. So go remember Power of 3 indicator by Flux Charts. You just type that into your trading view. Power of 3 by Flux Charts. This is going to be your menu. And then, as we discussed, it's going to plot out your accumulation. It's going to show you the signal, and you're going to wait for a fair value gap to form to close to target to the recommended TP. Right, so I hope you enjoyed this video. Please leave a like and subscribe. Go check out Flux Charts, link is in the description, and then I'll see you in the next one. Cheers.